So the prediction is that Realtor.com predicts that the average interest rate in 2025 will be 6.3%. Okay. Now, I know as we got into 2024, a lot of people were saying we're going to get into the fives. And I remember thinking at the beginning of the year, I didn't see that happening.
Yeah, I don't really think fives are going to happen.
Hey, babe, how are you today?
I am doing great.
Yes. Well, all right. So we are through Christmas, getting into the new year. 2024 in the rearview mirror.
But I have a question.
What's that?
What is going to happen with the real estate market?
In 2025?
Yeah.
That's what we're going to talk about today.
Perfect.
Yes. So the 2024 real estate market and the 2023 real estate market were very challenging, right?
Yes.
For agents, buyers, and sellers, okay?
Yeah.
We had high interest rates that really kind of put a screeching halt on market activity, okay?
Yeah.
So the other day, all of the sort of predictions for 2025 started coming out.
Yep.
And so let's go over some of those today real quick for
Yeah.
everybody who's thinking about what does 2025 look like if I want to potentially buy or sell a house.
Yes. And also keep in mind, these are just predictions.
Just predictions, right?
Like nobody really knows.
Yes, of course. Yep. But at the end of the day, real estate is data driven.
Yeah.
And there are companies, Zillow is one of them, Realtor.com is another one,
Yeah.
Mortgage Bankers Association. They crunch data all the time.
I know, but what did they say about the interest rates in 2024?
Well, yes. Okay.
Exactly.
All right. So the big thing, right? Where will interest rates be in 2025?
Yeah.
Okay. So the prediction is that Realtor.com predicts that the average interest rate in 2025 will be 6.3%. Okay. Now, I know as we got into 2024, a lot of people were saying we're going to get into the fives. And I remember thinking at the beginning of the year, I didn't see that happening.
Yeah, I don't really think fives are going to happen.
And you and I were never the people that said, wait till the rates get into fives this year.
Oh, gosh. Yeah.
And we never told people marry the rate. What is it? Marry the house, date the rate or whatever,
Yeah.
right? We just didn't do that.
Yeah.
Because I know that there's a lot more to interest rates than the Fed fund target rate.
Oh, yeah.
And the Fed dropped their target rate this 4 times this year?
Yeah.
Right? Okay. So anyways, so Zillow and Realtor.com are predicting a 6.3 rate on average. Now, here's the thing. When I hear people talk about rates being 5 or below, those rates are what we call crisis era rates.
Yeah.
Okay. There's something going on in the country or the world that leads to rates being that low.
Unemployment level and
Unemployment, COVID, right? So if you're looking for a rate to get into the fives, you're really asking for something catastrophic.
you're
to
asking
happen.
for COVID to come back.
Right. You're asking for something catastrophic.
You're asking for lockdown.
Right. So rates in the sixes are actually pretty normal.
Yes.
Right. Okay.
And that's great because then after, okay, if say it's 6,
Yep.
let's just say even 6. You can buy down your rate.
You can buy down a rate.
You can negotiate a credit.
Yep.
Like,
And so one statistic that I found the other day as I was doing some research for this episode, since 1976, the only times that we've had rates below 5% were from 2010 through 2021. And those are times that we were recovering from the great financial crisis and COVID, right? So I think what happened was, so if you go from 2010 to today, that's 14 years. So
which is crazy to
I
think
know,
about.
right? But so if you're talking to somebody that's in their early 20s, mid 20s, early 30s,
Yeah.
right? 14 years is a whole lot of their life where they've been
Yeah.
paying attention to mortgage rates, so they've always been low.
Yeah.
Right? They've been in that 4%. So they got used to it. What they don't know is that that's not normal.
Yeah.
Okay. So we're just in what I would call a normal interest rate environment and have been. These sixes
It's
and
a healthy interest rate.
sevens, right. And so I think what buyers need to understand moving forward is that's where rates are going to be.
Yeah.
Okay. And to wait for a 5 or a 4. I had a mortgage guy tell me this year, the next time we see rates in the 4s, your hair will be grayer and there will be much less of it.
I was going to say, are you even going to have it?
Meaning that it's years away. Okay, right? So interest rate prediction, let's call it mid 3s, 6.3%, right? So now Zillow is predicting, as far as prices, a 2.6% increase in home values next year. Well, Realtor.com is predicting 3.7, okay?
Yeah.
healthy growth in prices. So if you're a homeowner, you can expect your property to increase in value. Let's call it somewhere between 2.5% to 3.5%, right? As a buyer, you should look at that and be like, oh, thank you. Because during COVID, it was like 20% a year.
Yeah, that was not
sustainable.
Even I think the following year it was like 15 or something, and even that's just
it's too much.
2 or 3 is.
So as a homeowner, you're still gaining equity,
Yeah.
and as a buyer, you're looking at a normalized appreciation in prices.
Yes.
Good things all across the board.
Yeah.
So now for buyers as well, inventory, like what does inventory look like projection into 2025? So Realtor.com predicts an 11.7% growth in inventory, okay, which is a little bit lower than this year's projection of 15.2%, but still a nice addition of inventory, right?
And we always see, because I know we had a lot of people like during the holidays just asking, and they're waiting till after the holidays.
Yep.
So normally we'll see a little uptick.
Yep. We're always going to see less inventory the last 2 months of a year. Nobody wants to put their house on the market during Thanksgiving and Christmas.
Yeah.
They don't want showings. They don't want Christmas trees in their listing.
Everyone's busy too with family and stuff like that.
Yep. So now for sellers, the amount of sales that should take place next year Zillow is projecting an increase up to $4.3 million. Realtor.com is projecting a very small increase to just $4.07 million. So that's only up 1.5% from this year. Traditionally speaking, that is still a very, very low number. I'm glad to see that they've added some projections to the sales, but it's still not where it was pre-COVID, right? Mm-hmm. So we're still, from that standpoint, what I would call a real estate recession, where there's just not a lot of transactions taking place in 2025. Yep. Let's see, what else do we talk about in here? They've got...
I swear, I think during the pandemic, people were just like throwing money left and right.
They were, so...
It just...
And I think that that's so fresh on people's minds what the pandemic years were like, that it's made the last 2 years feel really, really weird.
Yeah. For
buyers and sellers. And I think as we look at projections for 2025, slowdown in, the prices are still going up.
Yeah.
Right? A little more inventory on the market. Mm-hmm. Interest rates sort of staying stable in that 6 to 7% range, hopefully, right? Some outside influences. We're now through the election. This was an election year. Those are always weird, right? So now we're through the election, and we'll be moving into a new administration January 20th. What does that look like? People are asking me. I don't know.
Yeah.
Right? The new administration's economic plan is certainly going to be different than the current administration's. I don't know what that looks like for real estate.
Yeah.
There's just no data yet, right? And these predictions that we see from Zillow and Realtor.com, they take into account that new administration. So we'll see. We'll see what happens in 2025.
Yeah.
Do you have advice for buyers or sellers in 2025?
I mean, just from these numbers, it still looks like a steady market. I do want to see more movement.
Yep. And that movement for me, because I agree with you, and I think that movement will probably come in the form of buyers coming to the realization that them sitting there waiting for interest rates to get into the fives is futile. It's not going to happen.
Hopefully. There's going to be some that are still hanging on.
Right.
For that fantasy land.
Yes.
And then after that, financially, what is people's buying power after that come into play with the interest rate and everything like that? Because, after those hurricanes and stuff, what is flood insurance? What is insurance in a whole going to look like?
Well, I think that's a great point. I think that's obviously, I don't want to say Florida specific, but that's a little bit more specific to areas that experience hurricanes. Where these numbers,
these are national. Yeah.
Yeah. So I do think that we could be impacted a little bit differently here by recent storms in the form of what does inventory look like?
Yeah.
What homes are coming on the market that are renovated, let's say January, February, March-ish, What homes are being still offered as teardowns?
Yeah.
Who's the buyers for those? Where do the buyers want to go?
I would really hope to see more movement. And what I mean by that is that, when we went through the hurricanes and stuff, we had a lot of people that were like, that's it, I'm done.
Oh, yeah.
Like, I can't do this.
Yeah, yeah.
It's too much. I'm
Yep.
going to move back to wherever I came from. There was a lot of that. And so, maybe that brings up a lot more inventory, and maybe they start to sell at not just giving the house away for like what they bought it for, but at not such an inflated price. And maybe that, I don't know, maybe that might cause some movement. I don't know. I'm trying to make my own predictions here.
Well, the one thing I always tell people when they ask me about the market and what's this and what's that is I always say that real estate is data driven.
Yes.
Okay. But data is lagging. We're looking at data from last week, last month, last year. And then we kind of calculate out, like, what does this mean for what's taking place
I know, but
now?
also we had those hurricanes and stuff, and we really haven't been able to have like a normal market since then. And then after that, now we're in the holidays and stuff.
Yeah.
So now coming out of the holidays and stuff, we're really going to see what the market dynamics are really going to look like now.
Yeah, because I do think that there's some pent up demand for people that have wanted to buy or sell.
Yeah.
Right. And they've been waiting.
Oh, yeah.
They wanted to get through the hurricanes, and then then they were getting through the holidays.
Yeah.
Because the other thing that we know about real estate is that no matter what we look at when it comes to interest rates, prices, whatever, people typically buy or sell because of a life event.
Yeah.
Having a baby, having another baby, job transfer, marriage, divorce, death in the family, kids moving out of the home. All these things kind of come into play where they're like, look, we either need a bigger house or we need a smaller house, or we have to move to this city, whatever the case may be. And a lot of people have put some of those life change things on the back burner because of what they felt were high interest rates. But at some point, your life can't wait anymore. The second baby still needs its own bedroom.
Yeah.
Right?
Yeah.
Who cares what interest rates are?
Yeah. And so these, these stats and everything, of course, it's more national. But I would say, if I was somebody that was considering selling and it's like, okay, after the new year, I wanted to put my house on the market and stuff, go ahead and do it.
Yeah.
Like, you can't find the right time to put your house on the market.
You can never time it perfectly.
Yeah, and you can't find the right time of like when to buy a house.
Right.
It's very unique to your own situation, your life events, time frame, all of this. So, even with these predictions, I know people are so interested in hearing about them and everything. But
sure, of course.
At the end of the day,
you got to buy and sell a house when it's the time for you to do so.
Yeah.
Yep, I know. So as we go to 2025, these are the predictions. I'm hopeful that we see an increase in transactions for everybody.
I'm not going to say I'm hopeful. I'm more like expecting it.
Yeah.
And it's weird because I've heard some agents, they're like, oh, it's going to get way worse than this. And I'm like, why would you even think that? Why would you say that?
Yeah.
Like, because I remember back, I forget, it wasn't like right when the pandemic happened, but it was a time where everybody in our industry kept saying, nobody's selling their house. Like, we had all these buyers that wanted to throw insane cash at houses, but nobody was selling their house in St. Pete. And I just looked at you and I was like, I'm never going to say nobody's selling, because I'm like, that's just a dumb statement. So for me to hear other people being like, oh, it's going to get a lot worse, I'm like, maybe for you, but for us, no.
Yeah. Well, we talked about on a recent episode that our outlook for 2025 is optimistic. My word of the year is authentic. Did you have a word of the year?
My word of the year is to be determined.
Oh, I thought it was growth. Was that not it?
No.
Okay. All right.
I've already had plenty of growth in 2024. I'm taking a pause from growth.
So now listen, if you're listening to this podcast or you're watching it, if you have any questions about these market statistics and really what we think is going to happen, just reach out to us. We're happy to have conversations with anybody.
Yeah, and what we're seeing happening in the market and stuff.
And the other thing is keep in mind that these are predictions.
Yes,
and
don't freak out.
Right, and we're going to watch them throughout the year and see how accurate they are.
Yeah.
Maybe we get to the end of the year and we find out that rates did get into the fives, and all of a sudden there's 5 million transactions.
Or we're at the end of the first quarter and it's just the market's hot.
You never know. Yep. All right. Anything else to add, babe, before we get out of here? I know we got to go do some shopping.
I don't think so. I think that's it. I think that's good.
All right, guys. Well, listen, thank you so much for, joining us today. Make sure to like and subscribe on YouTube. Follow us on Spotify. I would actually love to see some people listen to us on Spotify. So if you have Spotify,
and share it to your stories, tag us and stuff. Like, we definitely love to see that.
All right. Sounds good. All right. Let's get out of here.
All right. Catch you in the next episode, guys.